This is the Franchise QB Podcast, where we empower entrepreneurs to win big in franchising. We huddle up weekly to educate our audience about the most successful small business model ever created, franchising.
Welcome to the Franchise QB Podcast. I'm your host, Mike Halpern, a 20-year industry veteran and entrepreneur. My mission is for listeners to achieve their American dreams of creating wealth and independence through franchise ownership. Every week, we speak with franchisees, franchisors, or vendors that support the industry. Thank you for joining us, and let's get started. Joining us in the huddle today are Stephen Preuss, CEO, and Erik Helgesen, President with Paymore Stores. Welcome to the show, guys.
Thanks for having us, Mike. Looking forward to the conversation.
Excellent. So let's start with your backgrounds. How did you guys originally meet?
Even though we've only been franchising for about 4 years, Mike, Erik and I's journey together started 20 years ago in 2004.
Okay.
We were actually introduced by a mutual friend. We started throwing around some business ideas, and we actually opened up our first secondhand store in Massapequa, Long Island, 2 decades ago.
Wow, very cool. So that happened 2 decades ago, and that was in Massapequa. So tell me about kind of the history of that unit, which I know that franchising didn't happen until much later. So tell me a brief history about kind of operating that business from when you opened till kind of the time you decided it was ready to be franchised.
Sure. We love this story because this is kind of the basis of what Paymore was built on. In 2004, we opened up a generic secondhand store. We weren't focusing on electronics solely at that point in time. And we had different service lines like a consignment. So we ran that initial business for about 5 or 6 years. We did a lot more wrong than we did right. We made a lot of mistakes. But we came out of that first tranche of our career together with really the pillars of what we built Paymore on. We learned that, number one, electronics was switching from a need to a necessity at that point in time. That was about 2010. It was our most profitable product. It was our most voluminous product. Erik, when he tells you a little bit about his background, he's got a deep background in software and technology and coding, so there was a good fit there. And we also saw that there wasn't a lot of optionality in that space, and there really isn't a lot today outside of what we're doing. You could either buy a phone from Apple for $3,000, or you can go to Best Buy and get a gift card and have to buy new product off their shelves. But there really isn't a lot of optionality, especially in the secondhand space for electronics. So we wanted to really nail down and focus on electronics and giving optionality to the masses. And then the other part of it, the other pillar, what we call it, that we learned from that first several years, is that the secondhand industry overall, and again, we still think it is that way today outside of what we're doing, is completely stigmatized. When you think of the secondhand industry, you think of pawn shops, you think of shady deals, you think
Right.
of back alley, nothing regimented. Erik and I grew up in middle-class families, and if there was a regimented, franchised, clean, serviceable secondhand store, I think our families would have been there every week. So we took those 2 pillars and we opened up, or we repermutated the business, opened up at a different store in Paymore in 2011. So 2011 was really the formal start date of our concept and business.
Okay, and I do want to talk about Erik's software background. We'll talk about that in a little bit as we get into the concept. So, when you started franchising in 2020, at that point, did you just have the shop in Massapequa, or had you expanded to another branch at that point?
Yeah, so good question. I think to take it a step back in 2011, once we started it, we always were thinking ahead. We always knew that we wanted to, make this a more than one unit type of business. Erik took it upon himself to put together our POS system, which you can go into, which is a complete spine of our business and how it runs, and it's from the ground up. It's proprietary, and in my mind, it's our moat going forward with any type of competition that may arise in the future. So we really picked our head up in about 2017 after about 5 or 6 years running that business. We had lines out the door. We had millions of dollars in sales every year. We never did a stitch of marketing. Our repeat customer clientele was pretty high for a secondhand business. So we knew at that point in time we unlocked the code, that we had something. So we figured, hey, why don't we expand ourselves? But we knew that this really needed to be in every, market out there, every suburban market, every urban market. And we knew that if we were just going to do it, we'd probably be lucky to get to Jersey from New York. So we decided to do franchising. Erik and I are very aggressive in business, but we're conservative by nature. So we took a few more years to kind of put together the right team. We put together the right franchise development partner, the right legal, the right third party. We took a few years to really bolster up our corporate office also, with a lot of the people that have been with us in that Massapequa store for several years, 10 years. So in 2020, we were actually stamped and ready to franchise, and it's really been like a rocket ship since then.
Very cool. Well, thanks for the detail. So I want to take a step back and just give you guys an opportunity to explain to the audience exactly what Paymore is, what you do, so you can kind of walk through the major kind of service lines and products that you offer in the shop.
Great, thanks, Mike. Paymore is more of a technology and a data company that just happens to buy, sell, and trade electronics. That's how we view ourselves. We do what we do very well. We are the place to go in your local community to come in and trade something in, get a fair price for that, also be data safe. One of the things that we set out to do and really change the secondhand industry in a whole fashion is that we're providing people a safe place to be with their electronics. They come in, they trade it in, we wipe it in front of them, we give them a great price. They're doing their job to reduce electronic waste in their own community, so we're facilitating that. We're a green business, and we're giving them that accessibility to come in right then and there and get cash in hand without being involved in any fraudulent transactions or any additional hassles selling the devices online. So when Stephen and I set out in the beginning, we wanted to really create this atmosphere and this customer experience that far exceeded anything that existed in the secondhand markets or in the pawn industry or anything like that, any gaming stores or anything that existed. And we've done that. We've been well received in the community. We are that local place to go and buy, sell, and trade.
Yeah, so it sounds like a key component of your business model is building trust with the community and your consumers so they feel comfortable, they feel safe. And I think that's a really integral part of what you guys are up to. That's great. So thanks for that. So let's talk about the scalability. If an owner comes in to invest in a store, a lot of candidates want to build something, bigger than just a single unit. Is your model scalable? And if so, can you kind of talk a little bit about how you could do that within a market?
Great. So Erik and I look at ourselves not only as kind of new age franchisors, kind of dusting off the archaic type of mindset and nature of a lot of these older and more mature franchises. But we think that our concept and our business at this point in time is changing how people look at retail and franchising overall. Firstly, we're low cost. And that's something that Erik and I want to maintain. We don't want to put things in place just because we're a franchisor and make things elongated or more expensive. So you can open up one of our stores, and our typical store is about 1,600 square feet.
Okay.
That can cost you anywhere from $100,000 to $125,000 turnkey.
Wow.
And we are nimble with our floor plates. So we've built out stores from 500 square feet to 1,000 square feet, which are more of kind of our urban models or high barrier to entry markets. And then we have stores in more of a suburban or heavy suburban, somewhat rural areas where we have stores as high as 2,500 square feet. So we can build stores out every 100 square feet from 500 to 2,500 square feet, keeping that price point in that kind of $100,000 to $125,000 range. And if you've looked at our item 19, we're nearly 10xing, that initial cost on our average store.
Yeah, that's great. We'll talk about that in a little bit because I do
Sure.
want to dive in a little bit into the item 7 and the item 19. So,
Sure.
But I like the model. It seems like you don't have a supply chain because the consumer is bringing in the product. The hours aren't long. You don't have a tremendous amount of staff. Those sound like really key advantages. So can you guys talk a little bit more about what you see as advantages for being a Paymore owner in your franchise model?
Sure. We talk about this a lot. We have a lot of food franchisees coming over to us, a lot of automotive, what I call heavy lift franchises. So outside of just the initial cost on the build out itself, all we really need is a vanilla box. We don't have any heavy capital equipment or venting or anything of that nature. Really need is a vanilla box and very little permitting, which allows our stores to be open in 2 to 3 months. Our store is completely built out by one manufacturer, instead of having somebody coming in and 15 links in a chain to build out a store. And then once you have it open, our stores typically run off of about 3.5 employees, believe it or not.
Okay.
So as opposed to some of these, again, heavy lift franchises that need 15, 20, 25 employees to do $1 million in sales, we're at 3 to 4 employees depending on the size of the store. And our employee base, our labor pool is really people in their 20s that need to work and much rather be playing around with technology or their favorite gaming all day outside of flipping burgers or changing oil.
Yeah, and it seems like the guys that like to interface with the consumers are going to be front of house guys that are just showing devices to the customer, and then the guys in the back that are kind of evaluating are going to be people that like to throw their headphones on and be by themselves and just kind of get to work.
Couldn't have said it better, Mike. That's spot on.
Yeah, very cool. Awesome.
Yeah, and I think the last 2 points of that is really our hours. Even though Erik and I really work, 200 hours a week these days, we always wanted to put together a quality of life type of business. So our store hours are 10 to 7 Monday through Friday, a couple hours on Saturday rather, typically closed on Sundays. So that's what I was mentioning before about really changing the viewpoint of traditional retail, is that with our business, because it's about 70 to 75% e-commerce as far as our sales go, we don't need the lights on to make money. In fact, some of the times that we make the most money are when we're closed on Saturday night and Sunday when people are online buying product. And then, finally, is our real estate, which is much different than, again, traditional retail, where you need to be on the best corner next to Chipotle and Apple Store paying Lord knows how much rent for AAA real estate. We're a destination point, so we don't need to be in that AAA center. We can be in a B center down the block or across the street or in a shadow center, and that there's a conceptual net savings for our franchisees of 30 to 50% because we don't need to be in that AAA real estate. We're doing the same sales in a B store as we would in a AAA store. So I guess that's kind of the final part of the metrics and why we're so scalable and why we're such a popular option now as opposed to food and some other heavy lift franchises.
Yeah, I can definitely see how operators that have multi-unit restaurant holdings would like your concept because of the low build out, under 200K all in. You don't have the grills, fryers, hoods, grease traps, and then you have the advantage of a very small labor force. So all those things check a lot of boxes for restaurant guys that are looking to diversify. So that makes a lot of sense to me. So Erik, let's talk to you a little bit. Stephen referenced your technology background. You spent a decade building this point of sale system for Paymore, and it's a proprietary system that only you guys have. Walk us through the journey. Where did that technology start, and what's the technology look like today that a franchise owner gets to enjoy and access?
Great. So when we started off, we completely invented this concept and this way of doing business. So there was nothing off the shelf that we could pull just to power our business. So we undertook that task at that point to create our own point of sale system. And really where that started was keeping track of the devices, compliance, bringing things together, increasing the speed of the transaction, because in a secondhand setting, the transaction from customer to business is very slow. It's very archaic. It's not organized. There's no technology involved there. So we knew we needed something there, and that's where we started. From where it started to where it is now, we've undergone 3 different software rewrites in 3 different languages to make sure that we're on the top stacks that we could possibly have. That tech stack now ranges from hardware to software, mobile, cloud. And international expansions that we're working on. That software that we have and we're building is something that we're investing in heavily as time goes on. We are light years ahead of where we could have been, putting all this effort in, and really looking back, we used every mistake that we went through and built processes in this software to correct that mistake, but also create additional efficiencies as we went along. So our software handles customer management, compliance, inventory management, and one of our prize features is our data engine, which is completely proprietary. As our stores continue to work, from staff to managers to franchisees, buying, selling, and trading, everything we have is in real time, and that's being put into our databases, analyzed, and pushed back out with different algorithms to give our staff and our managers and our line workers better decisions in real time on buying and selling and trading when they're with the customer, or they're selling online, or they're selling in store, or something comes in that they need to purchase. Whether it doesn't matter what condition it's in, it's all spit back out to them. So as we continue to add stores on, our software is getting stronger and stronger and stronger as we continue to move forward. I could probably talk for an hour about our tech and where we're going.
I bet. No, that's really cool. I mean, I especially like the piece. I mean, every business needs a CRM. So the fact that you baked all this other stuff into there, like inventory management, and especially the pricing engine, like being able to put a valuation on the spot on a device is invaluable. I mean, that's a huge reason to join a franchise system just right there. And then when you're able to look at reporting and being able to view your inventory real time, like all that into one platform, it's really cool. I think a lot of tech savvy, 20, 30, 40 something investors are really going to gravitate towards that. So let's talk a little bit more about technology, but shift gears a little bit. So outside of the four walls, that's obviously very hyper local to the neighborhood. Let's talk a little bit about the e-commerce platform that a Paymore owner gets to enjoy beyond the physical brick and mortar. So can you talk a little bit about how that works?
Sure. So we have our shop.paymore.com, which pulls all of the products across all the stores into one searchable and browsable website. Customers or businesses are able to go onto that site, search what they want, and then narrow down to their favorite store or check something out and have it shipped to them free. We also have back-end channels that we built for less than favorable inventory, such as broken devices or incomplete devices that we have professional buyers all over the world that are purchasing from us in that channel. We also have different programs that push these products across multiple channels, secondhand channels like Facebook, Instagram, and different shopping sites. Also back down to the retail side of things. But we're constantly building new platforms based off what bigger businesses need that are buying these electronics. So what we're really doing is we're bringing in large businesses or entities that are looking to purchase devices and giving them a custom tech stack to reach our store owners in real time.
That's really cool. So do you guys have a sense of how the sales are divided between the retail sales for a franchisee and the e-commerce platform? Is it 50-50? Is it 75-25? Is that data available to you?
It is, yes. We do about 75% e-commerce at this point. As we continue to grow our retail footprint, we're seeing the retail side of things tick up, which is encouraging. But we sell things so quickly on our proprietary software and methods that we could move inventory within a matter of minutes online. So it naturally, the inventory gets pushed in that direction.
Gotcha. And one other thing that caught my attention is the warranty that you offer at Paymore. You have a couple different tiers, which I think builds into that trust factor when someone comes into your shop and says, hey, I'm going to invest in one of these products. Can you talk a little bit briefly about the warranty platform?
Sure. So we have a standard warranty. That's usually 7 days up to 30 days. That's actually one of the better warranties in the electronic space, even better than big box. We also have an extended Paymore store warranty, which customers can check out that further protects the product. One of the things, Mike, that we've seen people coming in and looking to shop is that they may be a little apprehensive about buying something pre-owned just for the fact that maybe it won't work or they've had some poor experience in the past. So we're really fortifying the fact that we're here to stay and we're going to back our products and they can continue to extend that warranty as time goes on.
Yeah, I love it. I think that's great. So let's kind of talk a little bit about the kind of strategy to expand within a market with a franchise owner. It seems like you do offer kind of a hub and spoke model where you have a centralized location and then you have some satellite locations. Can you talk about what that could look like for the right owner that comes in and wants to have kind of multiple physical locations?
Sure, yeah, a hub and spoke is an option. That's more so at this point in time for maybe an urban market. We have a franchise owner that's building out Brooklyn, which obviously is a parking and supply constrained area, heavy urban market. Building out smaller stores that are surrounding a larger store. But typically we're pretty nimble on our square footage, and we've gotten these stores down so efficiently that we can have a full service store operating and doing big numbers out of an 800 square foot store. There's not much to us outside of just some cabinetry, and we've put together enough stores now that we can be nimble on that square footage. As far as kind of scalability and how we look at these stores, we're population driven. So as long as there's a population in a certain area, we can open up more stores. We've gotten into some very suburban / rural areas and have done very, very well, with population counts in the low 100s. Most of our stores have around 200,000 people or more per location, but we're mostly population driven. If there's population, there's electronics. So there's a pool for us.
Very cool. So you talked a little bit about the different footprint of the stores and how you're nimble and you have some flexibility there. So I'm thinking an urban unit, you're going to be more like that 500 feet. You go suburban unit, 2,000, 2,500 feet. Do you guys help a franchise owner with site selection? Because clearly you want to make sure that this is located in the right spot. Once you sign that lease, you're there for 5 years, 10 years, whatever it might be. So do you guys provide real estate assistance, site selection, site approval?
Absolutely.
Okay.
Erik and I, again, we like to think of ourselves as kind of a new age franchisor where we don't mandate certain things. So we've gotten some very successful franchisees who have come out of 80 Domino's or 90 sub shops or 100 restaurants, and they know their locations and their areas better than anybody else. So we assist them with that process. We don't mandate that they have to use anybody, and a lot of times it's a collaborative chat between myself and their team. But outside of Paymore and what Erik and I have been doing, I have a heavy background in commercial real estate. I've done about 1,000 transactions in New York City, so that's actually my background. So I'll oversee that alongside the area franchisee. And for those who don't have a local connection, we actually have a national team, Paymore team at JLL, which is the second largest commercial real estate company in the world. That's solely situated and sole focus is to work with our franchisees. So we have that as an asset for them as well. I think also not to minimize it, but our process is much, much, much easier than what people are used to in the franchising industry. From some of the characteristics I've mentioned before about just needing a white box, a quick turnaround and opening, not needing a lot of TI or downtime. So we get these stores open in these secondhand or these second, B-class markets, white box, and open within 2 or 3 months. And we really haven't seen too many impediments so far about getting these stores open pretty quickly.
Yeah, I can imagine with an experienced operator that's opened multiple units in the food space, you become an expert in that pretty quick. And when you have a first-time investor that's coming in as a franchisee, they're going to need a little bit more hand-holding. So it's good that that background you have in real estate is going to come in quite handy.
Yeah, we look at everyone differently. Every franchisee, every territory, every development schedule. Again, we try not to blanket it like a lot of these other franchisors. We try to look at each area and each person separately and put together a plan that works for them.
Super. So franchisee evaluates the model, loves it, wants to get going in a market. They are in the process of working on their lease. What does the training look like to get a new owner kind of up and running and the ongoing support? And when does that take place? Do you do that once the site has been secured, or do you do that at another point in time?
We do that as soon as they sign on and sign that FDD.
Okay.
We invite them into our collaborative chat, and what we've done is we've brought all the staff, managers, and franchisees all into one group chat, which is broken down to different channels, but they're able to view what's happening in real time across all the stores, any questions, the answers, the tips, the tricks. But by the time they sign their lease, they're feeling comfortable with how we're operating. What happens then is they would do a 1-week in-store training in one of our training stores, which is really rolling up the sleeve and getting in there and buying, selling, trading, and jumping right in and learning everything you need to know to go out and operate one of your stores. We follow that with a week online, which can be done simultaneously if they'd like, but the education never stops, especially in electronics. Things keep changing, new models keep coming out. We are on top of that. We have a great support staff. We have that collaborative chat, which they're in all day, answering live questions and being there for all the staff across the whole company. It's incredible.
That's really cool. Awesome. So let's talk about the territory. I know that that's likely going to be either rooftops or population, and it's going to vary in terms of the ring around your unit based on population. But how do you guys determine territory sizes?
Sure. So again, we look at every territory differently, but really it's population counts.
Okay.
So just for an example, I guess, if a market is 1 million people, depending how dense or spread out that location is, that's probably a 4 or 5 store area. So it's in that kind of 200 to 250,000 population per store.
Okay, yeah, that's a good amount of density to support a unit. So let's go back to what you mentioned before in item 7. 200,000 or less seems to be kind of that sweet spot. So what are we talking about to get open? I mean, you're going to have your franchise fee, you're going to have working capital, which is going to be a few months of runway with labor and utilities and rent and so forth. What else are we talking about? You have like a millwork package. What else goes into that number?
So we've gotten that down over time and pretty accurate. We have really one link in the chain, if you will. So we have one major provider who comes in and manufactures the millwork and the cabinetry, and they actually build out the entire store for you. Cool. From the cabinetry to the desks and everything else. So they come in there, and again, on a typical store, which is about 1,600 square feet, you're in that 100 to 125 range. And then outside of that, you're looking at some working capital. So all in, you're probably at about 175,000. And at that point in time, you're operating and running, and hopefully have a store filled by the end of that first 30-day span.
Yeah, I mean, having that turnkey build out is huge. It kind of cuts out a lot of the challenges that some owners face getting the right crew in there to build it. So that's really cool. So let's talk a little bit about item 19. What kind of financial performance metrics can you share with us about Paymore?
So we could just share what's in that item 19. This item 19 is going to look a lot different than last because we added 6 new stores last year. We'll probably add about 40 stores this year upcoming, but we have some runway as far as our original 4 stores, which have all been open for several years now, and in all different types of markets. So someone can sign the non-disclosure and certainly get a pretty good snapshot into what our sales are for our stores. Some of them are more mature stores, as well as some of the newer stores that have come online in all different types of markets across the country.
Okay, so does your previous FTD show the average at over $1 million, or is that not something you're able to share?
Correct. Well, the item 19 from last year, our average store was about $1.5 million.
Oh wow, that's awesome. Very cool. It's going to get a lot of people excited when you have like a 5 or 6 to 1 sales to investment ratio. That's rare. So you touched on this a moment ago, but how many stores do you currently have open, and how many of those are in various stages of development?
Sure. So we have 24 stores that are operating,
Okay.
and we have over 184 in development within the United States, and we're actively having conversations in 6 different countries.
That's very cool. So tell me a little bit about who you're looking for. Like, what makes an ideal Paymore franchise owner?
Someone who's going to listen to the process that we put together. I always coined the term LTE, listen to Erik. But I think overall we've seen some kind of green shoots as far as some similarities on the franchisees that have really gotten to a sale volume in month 3, where others have gotten there in month 5 or 6. Number one, they've had some successful scaling in their background.
Okay.
A lot of it obviously has been in the franchise world, where somebody's come and from an 80 store build out or 100 store build out or even a 5 store build out, they've scaled something previously. And that really doesn't need to be in franchising. We've had some great people come from corporate America that have had some really high paying jobs for 20 or 30 years for Fortune 500 companies, and they built sales teams or they built teams around them. So really in a general statement, somebody who's scaled something and have been successful at that previously. And then the other point, which is a little less important, but we've seen very helpful, is that people are coming in with some sort of team or structure behind them. It doesn't necessarily mean that they have to come with a 10-person stack team from the beginning, but a lot of people are coming in with their family or their sons or their brothers, or maybe a GM or two, or an area developer or two from their previous life coming into here. If they have a semblance of a structure coming in here, we've seen them get into their second store in month 3 or 4 or 5, as opposed to somebody who's coming in by themselves and maybe haven't scaled as many things in their past. Maybe it takes them to month 6 or 7 to get into that second store.
Very cool. I mean, we covered a lot of ground here. It's really interesting, a very unique proposition. There's not a lot of competition that I've seen like this in the franchise space, so I really like that. Before we part ways, anything else you guys like to mention about Paymore?
Well, we really just want to educate the public on what we do, and that's most important. People have that stigma of that secondhand store, and way back when, as I mentioned in the beginning of this podcast, 20 years ago, Erik and I, or 2010-11, when we took on the challenge of really disrupting and revolutionizing that secondhand space. We want people to realize that there is an option for the secondhand space, for electronics, for last year's model, with a warranty, that they can feel comfortable with getting a fair deal. One of the stats we're very, very proud of, Mike, that we've been modeling and keeping an eye on over the last couple of years here is that once a person comes in and experiences our service and our execution, they are 75% repeat customer rate. Wow. The average secondhand store is about 7. So it's about 900 to 1,000% above of what a traditional secondhand store repeat customer rate is, and that just shows that we're what we set out to do, that we're doing, and we just want to get our messaging out to the public. Not only just for franchising, really, it's just getting the public to realize that there is an option that they can save money, put some money back in their pocket, and feel good about getting a fair deal.
Yeah, it seems like once you can get that customer past that stigma and let them break through, and they're a customer and they're like, wow, I have a device that works just like it's brand new, and I got it at a great deal, and the transaction was not painful. I can see why they come back time and again and tell their friends about it. So that's pretty neat. Erik, anything else you want to add to the mix before we wrap up?
I think Stephen touched on it. Really, it's just customer oriented. Come in, let us help you with your devices. You're probably not selling them because you're afraid that you can't wipe them the right way, or you may have content on there that you want to keep private. We'll wipe those devices. We'll find a value for you. If we can't, thanks for coming in and meeting us. We can recycle these for you free of charge. Come check us out on the franchise side. Come experience our store, our look, our feel, our staff, our franchise owners, and see what we're doing.
Very cool. Yeah, it's really nice to meet you guys right at the kind of inflection point where this thing's taken off. So wish you guys a ton of luck. And if anyone listening would like to connect with Stephen or Erik to learn more about the process to own a Paymore franchise territory, contact me at franchiseqb.com or on Twitter at QBFranchiseQB. I'll get you connected with them. Thank you, Stephen and Erik, for taking the time to get in the huddle and talk about Paymore with us.
We had a great time. Thanks, Mike.
Thanks, Mike.
You're welcome.
Thank you for listening to the Franchise QB podcast, where you're at the helm of your future as a franchise owner. If you enjoyed the content, please rate the show and recommend it to anyone that might be interested in franchising. Make sure to visit franchiseqb.com to subscribe to my newsletter and for an actionable playbook to go from walk-on to legend in your new business. Follow us on Twitter at QBFranchiseQB and join us every week for a new episode. See you next time.
Visit franchiseqb.com to take the next step of your journey towards wealth, independence, and franchise ownership. And remember, when working for the man gets old, you must do something bold. Thank you for listening.